Welcome to the Leafy podcast, helping real estate investors and entrepreneurs grow.
Let's start the show. Hey everybody, we're on the Leafy podcast. Today it's just Jen. Yay! But I have an exciting guest. So the person I'm talking to is the mortgage broker specialist. She's been helping clients for over 20 years with their investments, their mortgages, and their insurance needs. She is also a graduate of UT of Texas, that's right, hook 'em horns, and she resides in a College Station with her two teens. She's also a host of her own radio show for over a decade. So we're about to learn a bunch of really cool stuff from Debbie Bloyd. Debbie Bloyd of Money Strategies with Debbie. That's moneystrategieswithdebbie.com. I'll probably say that 10 times. Anyway, welcome to the show, Debbie.
Hey, welcome. Thank you.
So you're in Vegas right now for a huge realtor function. So what are you doing over there?
So I basically get to talk to real estate agents about helping their clients with financing. You know, agents show the houses, find the pretty kitchens, but they've got to be able to afford what they want. If you do a reverse mortgage, which I think is what we're going to talk about, you can do a reverse mortgage purchase, and over the age of 62, you can actually buy twice as much house for half the price. So it's a great way to get seniors in beautiful homes to live their days in. So instead of buying a $400,000 house with cash, they can live in a $400,000 house with about $200,000 down. Never pay another house payment. So it's a great way to stretch their income as they retire.
Okay, so explain that a little bit more about how that works. So you have to be over 65 to get a reverse
62.
mortgage?
62 is the age. Now, there are some products that are coming out for age 60 and above. Every state has different laws. In Texas, both people have to be above 62. In other states, it's 60. Also, in other states, you could have a husband that's maybe 65 and a wife that's 55 and still do a reverse mortgage. In Texas, they both have to be over 62. So every state's a little iffy on their programs. But it's a big national program. It goes through FHA. And they do our first-time homebuyer programs. So basically the same type of loan, same type of mortgage insurance for a different category of people.
Okay. And how do you feel that this is a benefit to people who are retiring?
So as you age, okay, so let's just say a typical couple, you know, you live in your house, you try to make your mortgage payments and have your house paid off by the time you retire. That's what they've always been told to do. Have their house paid off so when they go into retirement, they're not making a house payment. Well, then what happens? You have unexpected expenses. So you may not have all the travel and stuff after you get a little bit older in your retirement years, but then you have medical expenses, heart attack, stroke. Now you need in-home health care. You need different types of health care. It gets very expensive. They've tapped out, or usually tap out of their IRAs, their pensions, their 401ks, and then they're just left with their Social Security money and what's the equity left in their house. Well, to get equity out of your house, you only have two choices. You either refinance it to take cash out, or you sell it. And if you sell it, you still need a place to live. A reverse mortgage kind of bridges that gap. It allows you to take money out without ever paying it back. So you and me, if we were going to take cash out of our house to pay out credit cards or student loans or put our kids through college, we would have to make payments on that.
Right. This
special loan over the age of 62, a reverse mortgage, allows the seniors not to make any more payments and actually let the payments grow. So when their heirs sell the house, there's still equity left in the house, but the parents haven't had to make a forward payment in years.
Wow.
It helps stretch out their retirement money.
Okay. So, so I'm trying to think about that. So why is that good for the economy though? Because you think that everybody's going to want them to keep on making the payments. So almost too good to be true. Let me put it that way.
Yeah, and it sounds like it, but it's not. So there's something called mortgage insurance that you pay on every month. So if you were to come to me as a first-time home buyer, you pay mortgage insurance until you have 20% equity in the house.
Right.
The seniors do the same thing on a reverse mortgage because it's through the FHA. Federal Housing Administration. So they're making a payment as mortgage insurance. And then as they grow older, their house should, we're hoping our economy keeps going up. The appraised value goes up, right? A little bit every year. So as their interest rate has gone up and it's left their payments, so every year the interest rate is locked, but it goes up, it's like 5.5% maybe. So it goes up 5% a year. So the payment is just like you and me making payments, except it accumulates in the loan and it's not paid off until the end. Well, in 15 or 20 years, the house will have appreciated 3 to 5% a year is what we're hoping. You know, that's what the economists say. So that, yes, both of the numbers are rising, but when you go to sell the house, you still have equity in the house and the heirs do get money out of the house. There's very few instances where the heirs don't get any money. The biggest thing to get people to understand is you still have to keep paying your taxes and your insurance, just like you and I do on our house, or your house will go into foreclosure. Okay. So the bad rap about reverse mortgages came about 10 years ago when they said, oh, reverse mortgage took my mom's house. Well, no, actually your mom didn't pay taxes and insurance. You and I would get our houses taken if we didn't pay taxes and insurance. So it's the same premise, a different type of loan. It is good for the economy because it keeps the seniors spending money and living, just not on their Social Security. So Social Security isn't enough. It was never made when they made it back in the Roosevelt days. It was never enough to keep us the rest of our lives without a supplemental income. It was never supposed to be the only income we had. We were supposed to save our money. We haven't, as a group, saved our money very well. And everybody goes, well, how much money do I need to retire? More than you have. Always more than you have. Do you need more money to live on every month? Probably. Most people want more money to live on. They live in a nicer house, drive nicer cars, take nicer vacations. But as you age, a lot of that money doesn't go to new cars and vacations. They're not frittering it away. It goes to healthcare costs. Healthcare costs are exorbitant for our seniors today.
Right. And and also too, we're living a lot longer than what
we are
expected. You know,
a lot of those pensions run out. You know, pensions will only last you so long. And a lot of us, like I've been self-employed most of my life. I don't have a pension. I have a 401k. So a lot of people only have 401ks, but you can borrow against that to buy houses or pay off different things. You don't always get to the end of your retirement of like maybe 60 or 62 or 65. That 401k money is what you're counting on. Well, that's been invested in the stock market. So you know the stock market, it goes up and down. Right. So if you retired in 2008, you retired with a lot less money in your 401k than if you retired in 2012 when it had its way to inch back up a little bit. So we're trying to save you as much money as we can for your golden years, because for some people it's not very golden.
Right. No. I mean, people are talking about this all the time. So I'm glad that you brought up that, because you hear reverse mortgages and then there is a negative connotation.
There is. A lot of people are like, oh no, I don't even want to talk about that. I'm like, do you even know what it is? You know? Yeah. And they're like, they don't know, but they don't want to hear about it either. And so now we are endorsed by a lot of financial advisors and CPAs, because if you do have an IRA or 401k, those are usually managed by a company or a financial advisor. That financial advisor makes money on the money he has or she has under management. Right. If you start taking out of your account every single month to live on, that money manager is making less money. Just the way it goes. If I can take money from your home that you're not using anyway, once you pay off your house, you may have $300,000 or $500,000 just sitting there. It's inside your house. It's not making you any income. It's better to take it out of your house and let it start making you income. So if you live in a home and you're over, say you're 65 and you own a $500,000 house free and clear, you've done your job. You've done a great job. But now you'd like a little extra money every month, or you would like some more cash flow. There becomes a point in our lives where cash flow is more important than stuff we have, like life insurance. Life insurance doesn't pay off until we're dead. So we don't get to use that as our monthly money, that our heirs get that. So if I want to make more cash flow, it's a great idea to take that reverse mortgage money, take some of that money out. You can buy an investment property, buy a commercial property. You can invest it in stocks and mutual funds. You can do anything to give you that monthly income. or just draw it down yourself as monthly income. But it lets you stretch the money that you have and reutilize it. It's kind of like going into your closet and having someone put on new sections of clothes together and make you new outfits. You don't have to spend any more money, but you get a lot more use out of it. We're not spending more money that's in your house now. We're just using it a different way. It's your nest egg. Now we're turning it into income for you.
Oh, so it'd be like going in your closet and you decide to, you know, pull a bunch of outfits together. You can either take some outfits out and then they're gone, you know,
Right.
you're pulling it down, or you can
Right.
take a bunch of outfits out and invest it into a much bigger closet somewhere else and let someone else use it and pay you for the privilege of using those,
Right.
those
We're
clothes.
just,
Yeah.
we're
Okay,
just
I get it.
reusing the money. So now financial advisors and
I get it.
CPAs call me in. And they're like, so what would you, like, our lady needs this much money every month. So
Mhm.
a lot of it is women, you know, women live longer. A
Right.
lot of times when the men start with their health problems in their 60s and 70s, that depletes a lot of the family's money. He has a heart attack. He can't work anymore. So now they're starting to pull out of his pension, pull out of the 401k or the IRAs. So
Right.
when he passes away, a lot of times she is left with Social Security money on one side and the house on the other. She still needs a place to live. This gives her access to all this cash over here in her house. So it's a different way to work the money. And financial advisors like it because you've already paid tax on this money. This is a non-taxable event.
Right.
So you're not taking the equity out of your house and paying taxes on it. When you take money out of your pension, your 401k, and your IRAs, you are paying taxes on it. So it's part of a master financial plan. I'm a financial advisor as well as being in the mortgage business. And I work with other financial advisors to stretch their retirement money.
Wow. No, I mean, I feel like my eyes must look like big Al saucers because I'm trying to suck this all down because this is the first time I'm going to say this is the first time this made sense to me. And this is what I do is asset protection, but it's like something different. So if you're not a mortgage specialist or a certified financial planner, this, you know, don't feel bad if some of this felt like Greek to you before she started talking. It felt like Greek to me too. I'm like, what? I know other things, legal structures and stuff like that, but this is different.
And financial advisors, as smart as they are, they need to know more about the mortgage business and they just don't. Just like I'm a financial advisor. I don't do wills and trusts and estates, but I know people that do. So when we do a financial plan for someone, we pull in their CPA because everything we do has tax ramifications. Pull in a financial advisor, a mortgage person, because there's always the house involved. And it's just, we're structuring the money together for you, but we kind of have to work as a team. If you only go to a financial advisor, your advice is only as smart as they are. And, you know, there's a lot of differences in financial advisors, whether they work at great big companies or they're self-employed. You're only as smart as that advisor. And those advisors at the big box advisor companies, they're supposed to push IRAs and mutual funds. That's what they get paid on. That's what they push. Now, withdrawing it all and the tax ramifications is not their strong suit. So I have been kind of odd my whole life, and I've got these little pockets. I do long-term care and insurance and mortgages and financial advising. So I'm different, but now my difference is helping educate people. So I'm really happy I'm a little different now because I just know one thing. I know lots of things. And I'm out here on a real estate convention because I have a real estate license too, and I help real estate agents structure deals. So it's best to find the most educated person you can. And just because they say they know how to do a reverse mortgage, yes, I can fill out an application, but what are the ramifications for it? You need to find someone super educated. And so I'm licensed in a lot of states. I can help people everywhere. And it's just like calling on the phone to a 1-800 number. Those people are at call centers. They don't know your financial advisor. They don't know your CPA. I have different skin in the game. I feel like I'm a certified senior advisor. And what that means is I've got a special license to talk to seniors. So there's some problems with reverse mortgages, right? One of the problems is the seniors have to be still knowing everything that's going on. So I've had a lot of early Alzheimer's, dementia patients that unless there is a medical, you know, you get a medical power of attorney when you do a will. Well, you have to have a regular power of attorney to do real estate transactions. Okay, some people don't do that in time. And they'll meet with me as a family and say, Mom and Dad aren't doing very well. We need to find a way to help them with their money. They're not good with their finances anymore. But they have to be cognizant enough and knowledgeable enough to get what I'm doing for them, or I can't help them. A lot of times people wait till their mom or dad are Alzheimer's specific, showing the signs, and then I'm not able to help them because they don't have the right power of attorney. So this is it's a really delicate subject. Seniors don't like to talk about their money issues, so a lot of people come to me not in the best of times, but under duress. Dad's died, mom just spent all the money, we don't know how to help her, we need some help, and the only thing she still owns that they understand is her house. So a lot of times with these clients, I don't get called in during happy times. The money manager of the family, whoever that is, has suffered an illness or a loss, and now everybody's scrambling to figure out how to make mom and dad pay their bills.
Yeah, that's the same with here with Leafy Legal Services with asset protection. You know, we get calls from people after they've been sued. Well, the best thing is before you even start buying the real estate, or before you start that graphic design, get your LLC, get your structure up. Let us advise you. It's going to save you so much in the end. It's just so much easier when you talk to someone like Debbie Bloyd. Again, we're talking, just to pause, we're talking with Debbie Bloyd. She's a mortgage broker specialist. She also happens to be the CEO of DLB Mortgage Certified Services. She is a certified financial planner. She is also a certified senior financial planner, specifically able to speak with seniors. And that's who we're talking about right now, because, and she's on a radio show, Money Strategies with Debbie.com. And so just to wrap up what we just talked about, don't go to someone like her when it's crisis time. Go to
well,
Debbie.
We need to plan.
Plan it out.
Most families, the holidays are going to be coming up, and a lot of people go home to see mom and dad. Yeah. And they haven't seen mom and dad in a while. And that's when we get a lot of calls, because now mom and dad aren't doing well. They're not keeping up the house. They need to maybe go to assisted living, and they need to figure out some of their asset plans. That's where I come in. So after the first of the year, I get really busy because now people have seen their mom and dad, especially if one of them passes away during the year. They sometimes cover for each other. And if they're not there to cover for each other or hide their money, financial issues, it all comes out. So, call me if I can help. I'd be happy to. If they can get a hold of me on my cell phone. I don't know if you can tell them that number. But
that's probably not. No, we'll give all at the end of the show. We're going to give all of Debbie's contact information. You can get
sure, and I'd be happy to talk them through it. Even if I'm not in the state that they're in, the state, it's a federal program. I can help them anywhere.
Yeah. No, I do think it's really important. And you just brought up a great point. Now is the time. The holidays are coming upon us. Thank goodness, because I'm here in Texas. It's been so hot. I'm just like, please let us get a norther. That's what we call a norther through to get some cold air. But yeah, it's the time to make that assessment. So if you're kids and you're going to go home and see your parents, it's never a fun conversation, because
it's always hard.
It's always going to be hard, but it's the thing you've got to do, because rather have it be a little bit uncomfortable, and then you unlock something or a way for your parents to maybe, they're like, you never know, they could be looking at those independent living. I actually have one of my good friends who is the director of a very large, and it's luxurious independent living facility. I say it's luxurious, but it's actually more affordable than some single.
But they're nice.
Oh, they're it's really so nice. So they have the everything is there, from the chapel to they have a spa to they have everything in there, and they go on these things. But you don't know, what if your parents were like, well, we could never afford to do anything like that. We could never afford to live like that. And it would just take the complete burden off of them, a burden off of you. Plus, many of them, if they're a continuum of care community, they also might have an assisted living, a memory care, and a skilled nursing. So they don't have to leave their very nice and well-appointed apartment. So they could be using maybe a reverse mortgage for the home that they're in right now, then maybe turnkey that property to be able to rent it. And then they could live where they're with a bunch of seniors and they have activities and they have food given to them 3 times a day, and you can still come and visit, and it's going to change their life.
Well,
So,
I don't think we don't like to have the conversations with our parents to know where they're at financially. I don't know that anybody likes that. You would not like it if I asked you those questions. Everybody thinks, oh my gosh, they're going to judge me. But that's not what we're trying to do. We're just trying to put you in a better position. A lot of seniors have been taught their entire lives to scrimp and save, and therefore they don't understand complicated money matters because they thought they're not smart enough. Well, everybody can understand this. This is not, if I can teach it, you can understand it. I try to make it so simple for people. And everything is done by age. It's done on a computer software program. You give me your birthday, the value of your home, the software does the rest. It tells me how much I can take out, how much do you get, what you'll have left in 20 years. I mean, it's a full, it's called reverse vision. All financial people use it that do reverse mortgages. We all use the same software. It's a great program, and it prints out a proposal. It makes it easy to understand. So don't let this seems really complicated. I don't want to go there. Go there. And remember, your parents were taught not to disclose a lot of stuff. Most of my friends, their parents are passing away right now. We're all in our 50s. So some of our parents are starting to pass or put into memory care or different things. And they're surprised to the good or surprised to the bad what their parents have saved up. So some think their parents are loaded, and they're not at all. Others think their parents, they live like they don't have a dime, and they've saved up all this money and they're eating cat food when they don't have to, when there's products like this in place to help them. So I don't know that we really ever know what our family's financial situation is unless we have a conversation. I know it's tough, but it's better for them. And you're going to have to pay as the kid, as the adult child. Like for me, I've got kids in college now. My kids just got out of high school and into college. So if I had my parents still living, a lot of my friends are taking care of their elderly parents. We're called the sandwich generation. We've got younger kids and older adults. And a lot of times our finances now are going 2 ways and to us. So they're going 3 ways. That's a lot for any family to help. And if your parents are sitting on this nest egg of a house that's worth money, that nest egg could be providing, and like you said, taking you off the hot seat for having to pay for bills and cover their cost of living when that's not necessary. It's putting a burden on everybody that's not necessary.
Yeah, and what's the worst case scenario? The worst case scenario is they sit you down and they end up bringing out a financial plan and they school you on all this stuff that they've already done. And then you're like, so I don't have to worry. And they're like, right. No. And then they go, I can't believe you thought I didn't have our stuff together, because, we're living longer, but we're also smart too. So there's a lot of seniors out there going, honey, I already got this locked tight. Well, good.
That's true.
Good.
But the other
talk to your kids, because maybe your kids will go, well, wait a minute, because then your kids, especially if you're older parents, and you're in your 80s, and you still might be very savvy. Let's say you've already done this. You've already worked with Debbie. Okay.
Right.
So everything's good for you. Bring your kids in and say, so tell me about your plan. What's your plan? And see if they have that and let them know.
Referrals go both ways. I've been, the parents have called me, and then some parents don't want their kids to know what they've done because they're ashamed that they don't have enough money. And I said, this is just money management. It's got nothing to do with your skill set. You're not a money manager by trade. Somebody's a dentist. They're not a money manager. They're an electrician. They're not a money manager. I'm a money manager. I'm not an air conditioner repair guy. So I can't help you do everything. Just this. This is my skill set. It is very interesting, though, to see parents not want to disclose for the bad or for the good. So like my kids, we talk about money all the time, and they're like, Mom, are you worth more dead than alive? And I think dead. I think I'm worth more dead. But thank you for asking. Yeah. So, I think everybody kind of needs to know where things are at. Is there life insurance? Is there long-term care? Because if there's not long-term care in place, you can get that for a really affordable price until you're up to 70. After 70, it's really too expensive. So I've already bought my long-term care. I bought it a couple years ago, and I told my kids for Christmas, I bought myself a long-term care policy. And they're like, why do we care? And I'm like, you're going to care when I need it, and you're not having to help me pay to live. That's when you're going to care. So these are things you can do for your family because it's all over well-being for the whole family. It takes off a lot of pressure.
Yeah. And also too, it's good to talk about money because money is just money. You shouldn't have money as some taboo object anyway in a family.
It
You
is.
should get it out. Yeah.
Everybody has a huge emotional tie to money. And a
Yeah.
lot of times people pull me in because I'm looking at kind of like a bird's eye view. It's just numbers to me. I don't
Right.
have an emotional attachment to it. So I can say, take that money, put it over here, take this money, invest in that. And it's all very matter of fact to me. So like when someone goes to sell mom's house, do they keep mom's house or do they sell it? It's a house, it's an asset to me. I know your family memories were there, but is that the best served purpose for that asset? So yes, you might want to hang on to that house because you were raised there, but is it a drain on your finances? Is the memory draining you of other things that memories you could be making in the present for memories that are already done in the past? Some people hang on to stuff way too long and then it loses its value, just like anything else. We try to maneuver the money around so it's a best, highest purpose for everybody.
Right. Because you can make new memories somewhere else. What's the better memory? Mom and dad in a house that is literally they can't keep up with anymore. It's
Right.
draining them. It's stressing them out completely. Or mom and dad somewhere where there's a bunch of other seniors that they feel young again. You're like,
That's
man,
where I would be.
yeah, there's a pep in my step. And then that house is now making memories for a brand new family. And you were able to make a little bit of money each month, your parents, to be able to have a little bit of the extras so that all of the things that they did in their life are doing
It
something
works
else.
out.
Yeah,
It does.
It does.
It does. A lot of times seniors can use a reverse mortgage too. They sell, like say they're in a two-story house, 400,000 two-story house. They want to sell that house and buy something on one level, bigger bathrooms, bigger hallways, bigger everything. That's when that purchase comes in. So you can sell a house and then instead of getting 400,000 cash and putting it into another house, you could spend 130 of it to buy a $300,000 house and bank the rest. That money then can go into a money market or an IRA, grow with the stocks and actually make you more money. So we're just moving money around. We're not taking anything. And again, it's not a taxable event. So when you sell your home, if you and I sold our home, we might have a taxable event because of when we bought it and how we bought it. But seniors, once it's paid off, it's not a taxable event. So it's easier for them to maneuver the money. They can do a 1031 exchange. You know what those are?
Yeah, like-kind exchange. In fact, I just wrote a blog post about that. I mean, it's still complicated because you need to have, not an arbitrator. Oh my gosh, the name just left me.
Well, you have a person in charge of setting that up.
Yes, you have to have a person in charge. There is a specific name for it, and it just left my head. And I don't want to go to my own blog post where I just wrote about this, define it. But basically, there is this one person that works on it, and you can go to leafylegal.blog and look at that. But that does it. But it's a like-kind exchange, and these can be very powerful tools when you're doing either real estate.
You don't have to pay taxes.
To not
any
have
age.
to pay taxes.
Yeah. So that there's a lot of things. I think people just need to reach out and ask for help. And just make sure you've got a quality individual you're asking. Ask them for their credentials. Ask them how long they've been doing reverse mortgages. It's one thing to fill out a piece of paper. It's another thing to know what it means.
Right. Yeah, you don't have to go it alone. That's one of my biggest things. Like, why go it alone? I mean, go ahead and ask for that help. I mean, the word you get to, just because you ask for help doesn't mean you have to engage the person's services. You are allowed to listen to them, to make an opinion, to go get a second opinion, to get the education yourself, and to go with what you feel is best. But educating yourself and doing due diligence is never, ever going to be a bad idea. It's always a good idea.
It takes a long time to understand a reverse mortgage. I have brochures and I have numbers and proposals and a computer program. And there are 1-800 numbers people can call. But those guys, they do the same purpose. They serve the same purpose I do, but I actually explain it and explain to it how it works. And I sit at their kitchen table still and sign documents with them. And those guys send you a FedEx package and just sign here, here, and here. And you don't really understand. So it's different. You can always find a local person that does reverse mortgages to help you. So
Right.
I want to encourage people just to get more information. There's a lot of free information out there. We don't take your home. You still own your home throughout the entire process. Just like you and I have a mortgage with Wells Fargo or Bank of America right now, they would have a mortgage with a reverse mortgage company. You're never off title. You always own your own home. When you pass away, your executor of your will, just like the executor of my will, would sell the house and pay off the loan. They sell your house, pay off the loan, and they get to keep what's left, just like my kids get to keep what's left out of my house. The difference is if there's a shortfall on a senior's home, FHA pays for that because you paid FHA insurance the whole time. The house takes on the responsibility, not the heirs. So it really does save families a lot of money.
Boy, that's just and it's a great way to end it too. Guys, we have been with Debbie Bloyd, the mortgage broker specialist. We have learned about reverse mortgages. I personally have learned a lot. If you want to hear more or learn more about it, just go to moneystrategieswithdebbie.com. We're going to put all of her links under this for you guys.
Thanks.
And so we'll have everything. And then of course we'll send it all to you, Debbie, actually Tammy, because she's going to have to get back on. I shouldn't say that. I feel bad because Tammy's really hurting right now because of her tooth. But guys, I want to thank you for being here on Leafy Podcast with us with Debbie Bloyd of moneystrategieswithdebbie.com. This has been just very illuminating for me. And I'm probably going to have conversations that maybe I don't even want to have. And I talk about stuff like this all the time.
Call me, we'll chat.
Okay.
I've even got materials to help you have those conversations with your family.
Oh, you do?
Yeah.
Oh, I might, because I am going to ask my mom. Mom,
yeah. Just you got to take care of your people, right? So
yeah, well, to make sure she's okay. You know, and that she's okay. You know, we all want to make sure everybody's okay. My mom is pretty cool though. She'll probably look at me and go, "Yeah, but are you okay?" And,
yeah, I'm fine. What about you?
Yeah, I'm fine. What about you? Okay, guys. Well, thank you again. Again, we've been with Debbie Bloyd. Okay. Y'all have a great rest of your week.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit leafylegalservices.com. They are waiting to hear from you. leafylegalservices.com.
Follow us on Facebook, Twitter, and Instagram.